Hello everyone. Welcome back to our weekly financial market outlook. So, how will the markets move this week? Let's get started. This week's theme is watch out for a flash crash. During periods of extremely low liquidity, markets are more prone to sudden and unexpected sharp moves. This forecast is based on statistical analysis using AI, calculated from data covering the past 200 weeks of foreign exchange rates, interest rates, and 17 other financial markets. Now, let's take a look at this week's convergence points, in other words, our profit-taking targets. USD JPY is 155 yen and 4 sen. EUR JPY is 182 yen and 14 sen. AUD JPY is 104 yen and 66 sen. The Nikkei 225 is 49,174 yen. The New York Dow is $48,194. The 10-year JGB yield is 2%. Gold is $4,221. We believe the market is likely to converge around these levels. BOJ Governor Ueda's remarks on the yen. On the 25th, Bank of Japan Governor Kazuo Ueda stated that the BOJ will continue to raise interest rates in response to improvements in economic and price conditions. Following this comment, the yen's depreciation appeared to be temporarily contained. However, on the 26th, the market reversed course and the yen weakened again. By the end of the week, USD JPY closed in the upper 156 yen range. Why a weaker dollar has not led to a stronger yen? The dollar spot index, which measures the strength of the US dollar, declined by 0.75% on a weekly basis. Meanwhile, amid rising geopolitical risks including U.S. military actions against Venezuela, gold prices surged above $4,500, marking a new all-time high. Despite the weaker dollar, the yen has not strengthened. This suggests that, in the absence of major market-moving catalysts, downward pressure on the yen driven by the perceived slow pace of BOJ rate hikes continues to dominate. As we mentioned last week, the only factor restraining further yen depreciation remains caution over potential foreign exchange intervention. Key warning levels for FX intervention. The United States is set to face large-scale Treasury redemptions again in 2026 and has shown a willingness to tolerate a weaker dollar. As a result, it is unlikely that the US would oppose Japan's foreign exchange intervention. Therefore, if USD JPY moves toward the 160 yen level, we believe the likelihood of intervention will be high. The biggest risk during year-end holidays: flash crashes. During the year-end and New Year holidays, market participation declines sharply, leading to extremely low liquidity. In such conditions, the greatest risk to watch out for is a flash crash. Sudden and extreme price drops or spikes can occur in an instant, so caution is essential. Remember January 3, 2019. In fact, on January 3, 2019, during Japan's New Year holiday period, USD JPY plunged from the 108 yen level to the 103 yen level within just a few minutes. While Apple's downward revision of its earnings outlook was cited as the trigger, the true cause remains unclear. Flash crashes occur more frequently in the foreign exchange market than in equity markets. When liquidity is low, traders should exercise particularly careful position management in the FX market. Please note that this forecast is based solely on estimates derived from a statistically driven stable convergence model, and we assume no responsibility for any investment results based on this outlook. That concludes this week's financial market outlook. Thank you, as always, for watching. We wish you all a very happy new year.